back. You are listening to TurboCharge Your Business on the #1 global business talk and news network on the internet, IBGR, International Business Growth Radio. I'm Patty Lawrence, and this is episode 38, Reading Financial Statements, the Balance Sheet. Be sure to go to our website at ibgr.network and download the show notes. So let's see, where do we start? Balance sheet and reading your balance sheet. So, balance sheet is one of the big three, the main three financial statements that you'll get for your company. So, business software, accounting software platforms for small business and big business alike generate three major statements in your reporting packages. So the first one is the balance sheet, the second one is the income statement, and the third one is the statement of cash flows. Those are the big three. There are other reports that are important to look at on a monthly basis, but these three are the ones that you should always be requesting as a business owner of your financial team, and they should be preparing that anyway for you. The one that we're going to talk about in this segment is the balance sheet. So, what is the balance sheet? We covered that a little bit before, but what does that look like, and how how do we read it, right? What does it really tell us? Well, first of all, it's of course one of the big three that you should be paying attention to, and here's why. Because potential investors will be looking at that if you have investors, or if you're interested in selling your business, that will always be requested. And the biggest reason for the balance sheet, and the biggest, in my opinion, the biggest benefit of the balance sheet is that it goes back to day one. It goes back to the start, the genesis of your business, right? The first day you wrote the check out to the bank to open the checking account, that was the beginning of your business. It was also the beginning of your balance sheet. You have cash in the bank and you have equity in your business. So why is the balance sheet so important? First of all, it's the only financial statement that goes back to the beginning of time, goes back to the beginning of your business, when at inception, what happened. So when the balance sheet is an accumulation of everything that has happened over your business over time. So even though you look at an income statement or P&L for your profitability, at the end of every year, that gets zeroed out, the slate gets wiped clean, and you start over. That's a do-over, right? After 12 months, boop, do over and start again, right? Start from zero again. And that's how that measurement goes. But where does all of that activity go? Well, it gets combined out, compressed down into kind of one number, retained earnings. It's your net income, and that one number gets plopped onto the balance sheet. Woo. That's what we did. That's the value we added, or didn't add, or took away from the business from the prior year. So, because of that, because of all of that rich history that's included in there, if your balance sheet is correctly stated, then chances are your P&L is correctly stated, your statement of cash flows is correctly stated, everything else in your business is probably more than likely properly stated. So that's the reason that we look at the balance sheet and we want it pristine. We want it clean, because that's the first statement that people want to see. That's the statement that people want to see when, you go to the bank, right? Bankers want to see that. They want to see It's something that is clean. We talked about it in the last episode. The chart of accounts makes sense. The breakdown, it's not too much detail, it's not too little detail. You have to have enough detail that people can look at it and make decisions, including you, including who's your management team. Is it just you? Is it more than just you? Do you have somebody that's responsible for your accounts payable or maybe your inventory, and you have some subsystems that support into those, that feed into those? You need to have that level of detail to be able to manage those. So, what else what else can we learn from our balance sheet? Well, we can learn what is going on. And typically, when we actually read a balance sheet report, sometimes we look at it on a monthly basis for trends. Well, it's not as, I guess, as common to look at a monthly balance sheet as it is a monthly P&L. And when I say monthly P&L, I mean like 12 columns, right? So you've got January, February, March, April, May, June, all the way over to December, and a total. Well, remember, the balance sheet is cumulative, and it's almost always as of a date, as of the end of the month. So as of 12/31, as of March 31st. It's always as of the end of the month because it's a point in time. It's always a point in time. And remember, it's cumulative. So as of a point in time, it's cumulative from that point in time all the way back to the beginning of time, right? So we got to remember that. And when we look at it, what are we looking for? Well, a lot of times we've talked about in previous episodes, we've talked about what do we look at as a benchmark? What do we look at as comparison? A benchmark or comparison. And for a balance sheet, you can look at prior month to see what the change was. So you want to see your change in accounts receivables or your change in inventory or change in accounts payable. What does that look like from one month to the next? Or you can look at it quarter to quarter, or you can look over year. So how did we do versus last year? How are we managing our receivables, our accounts receivables, versus how did we do versus last year? So, or how much money is tied up in receivables versus last year? That's another big one. Or in inventory versus last year. How much cash do we have on hand this year versus a year ago? That's a big one too. So that gives us a sense of what's going on with our business from a, let's call it a cumulative standpoint, not just, what happened in the month, but what has happened all along the way, and how are we really managing our resources? Because, cash is a resource, right? And how are we managing that over time? So, looking at, how do we read those to kind of let's shift a little bit into kind of the purpose of a balance sheet. Well, we talked about it being a point in time snapshot of the company's financial position because obviously everything is included there back to the beginning of time, right? So that's what we need to look at. And we talked in another episode that it's broken down with between assets, liabilities, and equity. So, what does that mean? Assets, liabilities, and owner equity. So, you've heard me say it before, assets are what we own, liabilities are what we owe, and equity is the difference between the two. So, if you think of it in those terms, you can say assets minus liabilities, what you own versus minus what you owe equals your equity or the value of the business. So if you think about it that way, that's probably a little bit easier to understand than, trying to just do accounting jargon, right? Because it's what you own versus what you owe. The difference between the two is how much value do you have? And internally, we use it to manage our business, right? Externally, the balance sheet can be used by somebody who's interested in your business, buying your company, or lending you money, right? They need to understand what is the financial health slash financial position of your business. So they can look at maybe and perform some metrics, maybe looking at some liquidity, profit, debt to equity ratios. There's a whole bunch of those kind of metrics and measures and ratios that we're going to cover in a future segment. But those are determined by or based on the numbers in your balance sheet, in your financial statements. And that's why those are very, very important to your company. So we're going to take a short 2-minute break right now. And when we return, we'll be talking about how to read income statements. Be sure to check out my collection of free resources at turboexecs.com/turbocharge. And you can continue the conversation with me, Patty Lawrence, on LinkedIn. You've been listening to Turbocharge Your Business in episode 38, How to Read the Balance Sheet on IBGR. I'm Patty Lawrence, and we'll be back after a short break.